here. Hey, Steve and Jamie, how's it going?
Hey, thank you there, Scott. Steve, what's happening over there? Happy
Hey,
Monday.
doing good. All right. Yeah, happy Monday. Ronald Osborne is saying sound. Hopefully you can hear us, Ronald. I think everybody else can, but back to you, Jamie.
Yeah, and that makes me think I should probably pop my questions panel out there. There we go. And I was missing something there. All right, glad everybody has ears and eyes on. Yes, indeed. Happy Monday to all you attendees as well. Today is the last office hours of April. April just kind of boom, here and gone. Taxes, and then here we have. Well, as Steve's going to point out here in a minute. Hey, S&P crept into all-time highs.
Did you say crapped or crept?
Crept,
Okay.
crept. I think I tried to say
Yeah.
crept.
Towards the end of the day, it tried a little bit. We'll get to that.
Exactly. Freudian slip there. So welcome everyone to another edition of the Office Hours. We're always happy when you stop by to hear what we have to say. So let's just get rolling here. And before we get into the good stuff, just this quick blurb here to make the attorneys sleep better. Just want to make sure everyone in attendance is aware of the fact that everything we share with you guys, whether it's this webinar or any of the other 8 webinars that we're hosting a week, it's strictly for educational purposes only. Simply meaning if you need investment advice, what to buy, when to sell it, how long to hold it, all that good stuff, please seek out someone that's qualified to do that for you, like a registered investment advisor or a Series 7 licensed broker, someone who can legally dispense that type of advice. But just so you know, everything we share with you guys is for educational purposes only. Now, for those of you who attend on the regulars, you know what I'm about to say already. Just want to take a brief moment here to let the new people that might be in here for the first or second time, let them know about the community that we've created around the technology that is TI Pro. And as you can see from the slide here, today's Monday, so you get myself and Steve, but at the top here, Barry's Trading Room, hosted by Barry Anderson. We've just recently given the trading room an upgrade, so to speak, new software. A few kinks to get ironed out. Some people have been talking about how they can't get in, but I think we're getting that ironed out a little bit smoother than it has been. In any case, it's a great environment, and anywhere between, heck, it could be 500 people on a good day, could be 600 people on a good day. But the man of the hour is always Barry. He opens the room up at 30 minutes before the open, and he's in there all day, showcasing his trades, showcasing his techniques and how he uses trade ideas. So the great part about our trading room is the price of $0.00. If you've shopped around on the web looking for different trading rooms, you know one thing that they all have in common. They typically have pretty hefty price tags, but not here in the TI community. That resource is free to all that would like to utilize it. So if you haven't been utilizing it, get on in there, see what it's all about. Of course, as I've already said, today's Monday. You get myself and Steve. Steve's going to take the steering wheel tomorrow for the trade of the week, and Andy Linloff will ride shotgun with him. Change it up just a little bit. Wednesday, hump day comes around. We like to switch it up a little bit and bring in Dan Merkin, the CEO and founder, Trade Ideas, along with our Chief Technical Officer, Brad Williams. Always good to hear what those guys have to say. Andy's going to round out the 5 p.m. Eastern webinars on Thursday. Andy's Trading Studio. I ride shotgun with him. And then for something completely different on Fridays, we have the Friday support session starting at 11 a.m. Eastern and typically going the full 3 hours that we've allocated for the support session. So the support session is for just anything TI related, brokerage plus questions, strategy fabrication questions, come one, come all. Typically you have myself, Steve, Andy, and Sean in there, all attacking your question, putting our 4 brains all on the same topic. So always good stuff there. So come see us at the Friday support session. Now, in addition to the 5 p.m. Eastern webinars, we've got TI University, Monday through Thursday. These all start at 12 p.m. Eastern. Beginners 101 on Mondays, 201 Tuesdays, 301 Wednesdays, and 401 Thursdays. once again, starting at 12 p.m. Eastern. We've also got these recorded on our YouTube channel. So if you have to work and you're not at a spot that's conducive to listen to them live, you can always go listen to the pre-recorded versions. But it's always a good idea to attend the live ones as well. So we do recommend that you take these in order, because what you learned in 101, you'll need to make sense out of 201 and so forth and so on. So all in all, 9 webinars a week coming at you. So sign up for the ones that you'd like to take part in, and you'll get those invites. Just a little slide here. We always like to show everybody how, our user base has expanded since we introduced AI back in the very beginning of 2016. So you can see here the progress, 2017, 2018. What's the bar for 2019 going to look like? Don't know yet, but probably going to keep with the trend there. User base is growing, growing. So the important thing about the AI is, we've had Holly 1.0, Holly 2.0, and Holly Neo for quite some time now. Pretty decent day from Holly today. We'll get into that just a moment here. But as always, whether it's Holly or any of the other functionality within TI Pro, we're always innovating, always pushing the envelope. So we are working on some new, or in essence, a new Holly module, and eventually we're going to do away with the individual modules and have it all combined in order to help it be easier to keep up with. All right. So there are some exciting things, some changes with Holly coming down the pipeline, and hopefully those will be here sooner than later. But just wanted to give you guys a little tidbit there about some upcoming Holly new stuff that's currently in the developmental pipeline. All right, on to today's itinerary. So Steve, I guess everybody's ready to see what the market did today. If you're ready to show them.
Ready to see what I'm going to draw? Sure.
Yeah, I can't wait. And I think I passed it over to you.
Yes, 1 second.
Get those unicorns, my pretty ponies, off.
Yep. Well, we can draw unicorns. Hey everybody, welcome to my desktop here. The last couple of weeks we've talked a lot about this level up here. I said the price action was so close to all-time highs in the prior SPY that when price action gets this close, it's going to drop by for a visit when it's in the neighborhood. We just didn't know if there was going to be any deep pullbacks going into it, which we haven't. What I see is kind of a triathlete runner just kind of limping across the finish line here on low volume. And, we peaked above on Friday, nice new close, and we traded in all-time highs territory today, I believe, in the S&P Spiders. Let's just double check that. Yes. Okay, I just made a little adjustment there, which makes a lot more sense now when we zoom back in, putting the highs back on those highs before, and looky what we had. We had a trading range during the day that failed to close above that key level. Looking at the aftermarket, about the same. I'll touch on Google in a second. Google might have something to say about the market tomorrow. But Jamie, did you ever see the Academy Award nominated and Best Director movie, The Graduate? Did you ever see that movie?
Dustin Hoffman?
Yeah. You remember what happens at the end? The end scene.
It's been a long time.
I won't put you on the spot, Jamie. The end scene was kind of interesting, and this is what the kind of market reminds me of here. After the close, we kissed that level. We couldn't close above it. So we're either staring at the world's biggest double top here, or we're going to just grind at these levels and maybe some pullbacks here and there. But the reason I brought up The Graduate is the ending scene. The entire movie they spend, chasing each other and trying to get together. And he meets her at the wedding chapel and he steals her from the altar, and they jump in the back of the bus, and then they look at each other like, now what? That's kind of what I feel like we are in this market right now. There's been a lot of excitement and moving higher, and we've kind of achieved the level of achievement today, but boy, we did it on weak volume, and we did it with a reversal at the close. I'm not quite sure what that reversal was all about at the close, but nonetheless, let's zoom in here. We get kind of an interesting looking wick above the critical level that we kind of need to close above. So we'll see how that works out. I don't know if Google's earnings again are going to hurt the market tomorrow. It's quite possible. We'll go over to the Nasdaq real quick and see where that green tag is. That green tag in the Nasdaq's a little bit lower than where the close was. So Google, if we take a quick look at Google, for those that are not aware, Went out about 12.90 and got hammered after the close. It's now at 11.90. Lost $100, about 6 or 7%, I think, top of my head. So getting back to the bellwether of the S&P 500, hooray! You know, we did it. Price pays, we're there. But now what? Again, you know, the end of the graduate. Now what? Where do we go from here? So objective achieved. Let's see what tomorrow brings. Again, there's no real bear case to be made at the moment. These moving averages are all fanned out. You can't be talking about bearish cases when you make all-time highs intraday here. First question, what is the name of the movie? The Graduate. Yeah, Margaret. So if you haven't seen it, it's a great movie, 1967, the year I was born. So here we are in the SPYs. Now what? No real bear case to be made. Light luster volume. You know, some of the day trades I've seen people try to make today, you know, they were good, then they were bad. It was just kind of sloppy intraday action. But let's move over to the Nasdaq, the one that's been leading us higher, and we will redraw those lines again. And the reason I'm going to redraw these lines is it's quite possible after the Google miss after market, we could see some price action and possibly dip back and retest this Nasdaq line. Remember, the Nasdaq has been our leader going forward. So any comeback of a test would be probably in the textbook of normal price action. Let's take a look at the Dow. Dow is not quite at all-time highs, but you can see how close we are. And interestingly enough, we'll see if there is any oomph to get us there. Back to the Qs, you know, again, they're the ones that were leading us higher. So I think tomorrow you're going to have to pay attention to the Qs for possible leadership. And then lastly, we talked last week about the laggard, the IWM. This guy just can't really seem to get out of its own way. He's trying. You know, he was a beautiful cup and handle for the most part coming into this few sessions, but decent close as well. Again, I don't think the IWM, the Russell 2000 small cap, is going to turn around and become leadership at this point. If we have some softness in the others, we'll see. Maybe the baton will be passed. But this is the index that's been lagging the most, and the way I'm calling that is this distance, you know, between its respective all-time highs. A lot of space still in there when you compare that relative to what the S&P is at today. Nasdaq is above today, and the Dow is threatening. So if we do get any pullbacks or weaknesses tomorrow, as indicated by the Qs, would be my guess with Google's bad earnings after market. It could be a downdraft, and the other three ETFs could certainly follow suit. So keep that in mind. I think Google's going to be the key tomorrow. Andy brought up a great point. I want to give him full credit for this. You know, VXX is no longer an ETF. We have what's called VXXB. They're onto the B series now of this ETF, this goofy thing. But, you know, all day long, I'm going to go back and forth here. Here's the SPYs moving up pretty much all day into about, you know, this area. We use that as a benchmark there. We can go back and feel like a referee drawing a line in the soccer pitch. Go back to VXXB, and this is a volatility VIX ETF. All day long, the VIX-B was also kind of heading up, and then that little downdraft we had at the end of the market certainly caught the attention of the VIX. And so the reason I bring this up is Andy's brought this up in the past sometimes. You know, we got a market that's just languishing to new all-time highs, but look at in the rearview mirror, people are buying protection. They're not maybe buying into this as much as they could, or maybe they're looking what I was saying, okay, objective achieved, now what? So thought that was notable, and I wanted to bring that up as well. We've seen that sometimes. This can be an early indicator of a possible reversal the following day, when you see a day when both the market stocks are up and people are also buying protection. Very unusual action there at all-time high, so I thought that was also very notable as well. And again, I'm not real sure what happened here. At the end of the day, the market-making algorithms like to square up, and maybe they're all pretty much long and they had to just regurgitate it up to go home flat. But we see a lot of interesting candles at the end of the day as the market-making algorithms kind of square up. And I think that's probably all this was as well today. But I'll be watching Google and the Qs tomorrow for confirmation, as well as Andy's observation in the VXXB to see if more fear and protection buying is coming into the market. And that's really all I have for observations today. Jamie?
Good stuff, Steve. Let me grab it back from you. And before we jump in here, let's go ahead and Let's just take a look at Google in after hours, okay? So here's the close. They just reported after the close, and whoosh, whoosh, whoosh. Here we are sitting down here, right around 1200, a little 80-point, around about an 80-point peel off there. Of course, who knows what's going to happen tomorrow? We were joking around earlier and said, hey, for all we know, Google might gap up tomorrow. But if it opens down there and trades lower, we can bet that's going to have a big impact on the overall market, and more earnings, other companies coming out. Really not what you want to see when people are hoping for, a close above that all-time high and off into the stratosphere. But we will see. Market very rarely gives us what we hope for. We just have to react. Okie dokie here. So let's take a look at what the CC readings were this morning after the first 15 minutes. And just a recap here, this is one of my CC compare count windows is what we call them here in the platform. This is the one that we're looking at right here, and this is what it looked like 15 minutes after the open. And just to recap here, in case somebody's seeing this for the first time, what am I looking for in this compare count window? Well, trying to get a little idea of which way the wind's blowing and how strong it might be blowing. If we're going sailing, it's always a good idea. Is the wind blowing and how hard is it blowing? Because if it's not blowing very hard, there's really no point in getting all the gear out there and hauling the boat out there and getting in the water. If there's no wind, well, you're not going to have very much fun. You don't want too much wind either. You want it to be just right. Well, looking at these CC readings here after the first 15 minutes, 51.49. Not a dead even 50-50, maybe just 1% off here. 51%, actually 1% to the downside, hovering right around, keep in mind this is before we popped those new highs. So didn't really get me too excited when I saw these readings here, all right? And typically like to see a bias of 55% one way or the other to make me think there's going to be any follow through to that direction. So in other words, if we would have saw 55% coming through here after the first 15 minutes, probably would have seen a lot more downside. But the takeaway is this: anytime I see a 51-49 split like this, or a 50-50, or it could be even a 48-52, that's almost flat, right? So what I always gear myself up for when I see these types of readings is anything goes. And you know what? The exact thing played out today. There were some shorts that were in the money really well, but if you didn't take that money, bzz, 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 you're back to flat. There were some longs that you're up pretty good in. Everything looks good, hugging the 10-period moving average or whatever your favorite indicator is. But if you didn't take that money, zip, 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 back to flat, or maybe even down, or maybe even a stop out. All right. So that was the nature of the market today. And of course, tempting, barely popping that new all-time high, just throws a lot more variables in there, right? There was a lot of hoping going on today, I'm sure. Once we got above that level, we were going to keep on going. But this guy kind of tempered my expectations right off the bat. And when we get into Holly, notice over here on the channel bar, every single module today finished in risk-off mode. Now, of course, these, this hadn't happened at this time, but it is what ended up happening. In other words, even Holly and all of her modules, risk off was the ticket, obeying the rule set. This is telling us if we were holding on for bigger extended moves, they just weren't there today. That's why risk off won the day on every single module, and it's been a while since we've seen that. But on the other hand, I actually like seeing this in correlation with the compare count readings, because this window right here did a pretty decent job at tempering my expectations for the day, right? So let's go ahead and talk about Holly and how she did today. So as we can see here, we had quite a few trades, and hold on while I get my little document here. All right, there we go. Okay, so total number of trades, 37 trades coming out of Holly today. 10 from Holly Grail, up $1.84 on those 10 trades, risk off. Holly 2.0 coming in just a penny shy of a full point on 14 trades. And then Neo coming back to life after kind of taking a hiatus for a while, 13 trades and up a solid 3 points, all in risk-off mode today. So typically, I like to pull the, the risk-on spreads up and see, showcase a few, which we barely had 2 today. Usually there's a lot more, but since the market did what it did, and it was kind of like the seesaw today, shorts are working, longs are working, shorts are working, longs are working. They were all working. Question is, did you take the money while it was there, or did you hope for more and sit that pullback? So let's do this. Let's take a look at the few opportunities where risk on presented itself today. NEO had the biggest example today, and guess what? It was on a short. And Tiger must be a pretty young stock because this is all we got on the daily. Not really too familiar with this name, haven't seen it a whole lot, but Holly sure called a pretty good short on it right up here. As we can see, about an hour and a half into the market, gets short right here at the blue line, and it was pretty much a little sideways action for the next 5-10 minutes here, and then this thing started getting traction and worked beautifully. This one made it the full duration on downward dog from NEO. So if we pull the strategy panel over here, we'll just pop this over to NEO. And we can see downward dog sitting at the top as far as win percentage goes today. 60 minutes was the hold time. So she made it the duration on this one, did what she's programmed to do. I mean, look at all the timed exits on NEO today. That's something you don't see very often. All these timed exits, meaning stop losses did not get hit, profit targets didn't get hit. She didn't get nervous and call the audible of reduced risk or profit save. Everything worked as it should. So that entry or that hold time comes up, she plugs out. We can see the correlation here, the shaded area. She plugs out of it right here. And then look what happens. We get more downside. Now, how do we attempt to extract some of this when we see Holly closing out that trade? Well, if we've been in it, we know what it feels like. A little sideways action, and it's just been working ever since. When Holly calls it right here and says, I'm getting out, we just kind of, size up the chart. Well, it's felt pretty good thus far. Maybe we're going to stay in. Maybe we're going to do a little of the 50-50 methodology, right? We're going to plug out a half the position, take our 45 cents with Holly, and we're going to keep the second lot because we like what's going on here. It's felt good. It's moved down, a little bit of wiggle off that initial bottom there. Maybe we're also taking a peek at the daily here and going, well, prior day here, we're butting up against this little level right here. Hell, could have room to the top of these candles right here, which is where it stopped today, right? But hey, if it really would have had some more momentum, maybe it could have got all the way down here. But using the tops of these previous days right here lines up perfectly. That is where the bottom was put in. But the bottom line is this. Notice the blue line. This is one of those where we could have kept the second half and used a break-even stop. Would have kept us in the trade for the remainder of the day, never even acting like it was going to go back up there and stop us out. But the beautiful part about doing half is you're locking in that profit on the first half. If we're using a break-even stop, we know that if it doesn't have more and it rolls back up, stops us out, we preserve the profit on the first half and either flatted or lost a few pennies on that second lot there. But a nice spread of $1.04 in the Tiger short trade here. And as you can see, things shrink up pretty rapidly here. We could look at SYNL, $1.07 versus $1.15, only 7 cents in the spread there. Nothing really to write home about. I will say this about SYNL, it was a duplicate signal, which we do see from time to time. Same strategy, quarterback here, and the exact same time. So really no difference in either one of those entries. All the numbers are going to be exactly the same. Now, not the case with our friend ZYNE here. So I'm just going to go ahead and sort by symbol here just so we can see all the Zine trades here. Now this one was completely different on all 3 fronts. We had the same strategy, strong stock pulling back from Holly 1.0. Then we had strong stock pulling back from Holly 2.0. And then we also had float on from Holly 2.0 all signaling sign at different times. So let's take a look at the first one here. The first one was strong stock pulling back from 2.0, 9:01 my time, which is central, so just add an hour for Eastern. So this was the first signal right here. Boom. All right. Then a mere approximately 17 minutes later, we get another entry signal here. And then the last one, 9:40, here. And there were up moves after each one of these signals. So not bad, and something that we don't see very often. You know, usually they're like the SYNL, where a strategy was duplicated, both signals get sent out at the same time. But completely different with Zine today. 3 distinct different entry times here. And the cool thing about it is in risk off mode, winner here, and a winner here, which once again is something that we don't see very often, but hey, we'll take it when it comes along. We did have another one here double up, and we can see in this one going completely different ways. AB, CB, first called as a short, and then later on called as a long down here. So a lot of trades today, a couple of double ups, a triple up. But all in all, to see Holly and all the modules finish in risk off mode with these pretty strong numbers, take that as a good sign, especially in today's market, which everybody that was in the chair today experienced a lot of the same things. Hey, shorts are working, now the longs are working, but they never seem to be working in unison today. So in a pretty shifty environment today, got to say pretty pleased with the way Holly ended up with her point total and risk off mode. And in a second here, we're going to get into, okay, well, this is a pretty decent day for Holly. You know, if I was running Holly on complete automation, what could I have expected from today? Maybe some of you did, maybe, you know, maybe some of you were wondering that, but we will attempt to cover that here in just a second. So a couple of more risk on opportunities here. We had the bigger one from NEO, but we did have a couple up here worth mentioning today. ABCB, 8 cents versus 21 cents there. Nothing to write home about, 13 cents. Let's take a look at AXSM. Pretty decent one here. So the initial call or entry signal right here from Holly, like seeing this, just an immediate draw to the upside, and then a little sideways action here. Pretty surprising to see that during this time right here, it's not a profit save that kicked in, but once again, made the timed hold, which was flowed on from Holly 2.0. So let's just take a look at that hold time here. This one designed around a 45-minute hold time. So Holly makes the entry here. We get up here, then we kind of go sideways for a little bit. She calls it right about here. Once again, this is one that if we would have used, stayed in the whole lot or did a 50-50 methodology with Holly and used that break evens as our stop loss, would have come close on this one, but not quite, and would have kept us in that trade for the rest of the day, giving you an opportunity to get out somewhere here or here as the day progressed. So a couple of examples here in the short, and then in this one where that break even stop would have kept you in even on a day like today. As we take a look at 1.0 up here, you don't really see any risk on spread there. So all in all, it's a slightly negative factor because we always like to see risk on and see trades that have more meat left on the bone. But in a shifty market like today, seeing Holly come in at risk off with these point totals, pretty impressive. So let's talk about the next thing here. Running the numbers with Holly. So there might be some new people out there going, well, you know, I hear you can automate Holly signals, or maybe some people that have been sitting on the fence because you've heard us talk about over and over. Just like a trading month, there might be 2, 3, 4 days where the action is really good. It could be to the upside, could be to the downside. But those are the days where if you really hold, you can make a lot more money than just, you know, scalping in and out. question is, how do we know when those days are? You don't. A lot of it's going to be based on, the gaps. The bigger the gap, typically the less momentum there is in the markets. And then using something like, for example, the compare counts that I like to use, or some of your other favorite metrics that maybe you've designed to try to help you establish your expectations for the day. But Holly today, I'm going to drag my little cheat sheet over here that I made so everybody can follow along here. 37 trades, all right, quite a bit of trades, very active day. Now, if we add up the point totals here, we came up with, or these sum up to 5.83 points total once we add all the modules together. So if we were running Holly and automation today and just taking everything, and keep in mind, when we're going over these scenarios, we're assuming that you're getting into every trade. So we have to calculate slippage, which is the difference between when the signal comes out, and even in automation, we're going to experience slippage, meaning maybe Holly's signal came out at 10 bucks, but by the time the signal got out there and you got the stock bought, you paid 10.05, right? Signal comes out at 10, you got filled at 10.05, that's 5 cents in slippage. So if we just assign 5 cents of slippage to the total of 37 trades here, you're seeing that comes out to almost 2 points in slippage alone, $1.85 to be exact. So we take 583, we back out $1.85, that leaves us with 3.98. So if we were trading 100 shares for every trade, then really what that boils down to is about 398 bucks if we got every trade and took 5 cents of slippage on the entry and the exit. Now, IB, because you can only automate at IB, and it's $1 minimum plus a little bit per share. So I'm just factoring in $1.10 per side or $2.20 per turn, right? So once we multiply that times the number of trades, we get about not quite $82 in commissions. So if we back out slippage, we're left with $398 on 100 shares. We back out our $81.40. And today is one of those days where Holly left unattended, had a pretty good shot at netting somewhere around 300 bucks, okay? But keep in mind, that's on a gross point total of almost 6, right? And, from what I've seen engaging with Holly before automation was available and once automation has came into play, usually that's what I typically see is for a good shot at coming out net positive on any given day, Holly needs to be up cumulatively somewhere around 3 or 4 points, because after we back out slippage and commissions, that's where we need to be. And today played out perfectly in that scenario. So just kind of like to go over this because a lot of people are unaware. They'll see these totals and think, well, is that what I made today? But we all pay commissions and we all incur slippage. So just wanted to give everybody a little peek into reality here and see how the numbers actually play out. Marguerite, I see your question there. When I say IB, I'm referring to Interactive Brokers, right? Interactive Brokers is the largest retail firm out there right now. Cover the whole globe. You got people from all over the world. I'm sure Ameritrade and E-Trade take foreign clients as well, but right now IB's got the biggest footprint as far as a retail firm goes, which is one of the main reasons why we chose to make Holly Automation and Brokerage Plus available with them first. And they also have the lowest commission rate out there, $1 per plus a little tack on per share, whereas E-Trade and Ameritrade and a lot of these other direct access firms, they're still going to be up in the $4.95 area. So that's a pretty big difference in commission between $1 and change and $4.95, $5 a turn. All right, so that's about it for Holly today. Impressive performance on a lot of trades, all finishing in risk-off mode there. So we'll see what happens tomorrow. And just like any day, I like to cover some of my good old bread and butter high volume tickers because there's always some good trades out there. Yeah, Lee, right here you're seeing, these are point totals, right? So yeah, bringing my little sheet back up here, if you're doing, you know, 100 shares, I was going over the scenario on 100 shares. This is a point total, right? So if you're up, theoretically, if you're up as a trader 5 points at the end of the day and you're trading 1 share per trade, you're up $5. If you're up 5 points and you're trading 100 shares, you're up $500, right? If you're trading 50 lot shares, you're up $250. So once again, we can point Holly to whatever we would like to. If I go into options here and I go to the Holly trade size, you can see I like keeping mine on 1 share because I just like seeing a point total, but we could easily put 100 shares in there and you're going to see all of the modules reflect the proper number here, right? So Holly Neo, $3 on 100 shares would be 300. On 1 shares, it would be simply $3. So Lee, I hope that makes sense there. All right. Now let's talk about some of the range breaks that were presenting themselves today. The opening range breaks, these things can present themselves 30, 45 minutes into the open, and they can show up at any time of the day based on whether or not that opening range is being broken. And whether or not we hit the trades depends on how pretty the chart is, so forth and so on. And of course, we like to have a little bit of volume behind these things as well. Now, got to tell you right off the bat, this little guy was pretty dried up today. My Turbo Ups family, no resistance, as the market was attempting to get the new highs. Now, let's backtrack here. Paltry readings after the opening 15-minute compare count kind of set the tone. Actually, it was 51.49 to the downside. And this window was pretty inactive, I should say. Matter of fact, the only one that caught my eye that I didn't take, of course, and that's Murphy's Law coming into play there, was this little guy right here. But boy, was it pretty. Some of you may know Pins because it's a relatively new stock. 1, 2, 3, 4, 5, 6, 7 days. This thing went public 7 days ago. Looks like the inverse of Lyft. Let's look at Lyft, L-Y-F-T. You know, not that old of a stock, but certainly opened up here and is languishing down here in these lower regions where, you know, Pins, we were laughing about this earlier, Pins, the exact opposite. Every day has been green. Don't hear a whole lot of fanfare. Of course, I don't listen to CNBC. Maybe they're talking about it. Maybe Kramer's ranting about Pins like he did about Lyft, but I doubt it. In any case, look at this gorgeous signal that was produced on Pins today. Looking at the 5-minute candles right now. So this one showed itself about 45 minutes into the open. And by the way, even if you're using 5-minute candles, it's best to start looking at these things at a bare minimum of 30 minutes into the open. You got to have something to gauge by, right? This one happened 45 minutes in. We got about 9 5-minute candles here, creating this nice tight little range with the prior high here, low down here. And then as we crept up here and broke that level, boom, we get the alert coming through here. Beautiful trade on many fronts. Just get a lift immediately, a little consolidation, a little push higher. I mean, this thing set up a couple of different times today. If you're watching the 5 minutes, just going up like a good stock should. And throughout the day, I mean, this thing would just consolidate, gather its steam, and then push higher. But a beautiful entry on Pins right here. And if we're using the prior 15-minute candle or the prior 15-minute low here, right here, you can see the risk was very low and it produced a very fat and juicy profit target area. So that was really the only one worth mentioning that came through this guide today. The other ones that were coming through here were very stretched out, the timing was off. And then when you take into consideration the backdrop of the day, not that surprising, which has led me to another kind of guiding measure here. When I'm looking for range breaks and I see these lackluster compare count readings after the first 15 minutes, it's started to point me to which windows to pay more attention to. So we had the lackluster compare count readings today. This guy's not very active, but boy, there was sure a lot from my regular turbo breaks up today. So what does that mean exactly? What did Jamie just say? Well, from this point on, it would make a lot of sense when we see these lackluster compare count readings below 55%, say to the upside. Well, tells me right off the bat, this guy may or may not be that active today. If we're going to really want to find a lot of quality, we're going to have to go to the range-bound stocks. In other words, stocks that aren't necessarily at all-time highs, but still might be setting up nicely for a nice intraday push. And we can always use the daily to try to figure out how much room might be in it if we get into it and it starts working. So let's take a look at some of the ones that came through here today. All right, let me just go in order of time here. All right, here was a pretty good one right here in EQNR. Keep in mind, what did the tracking ETF of the SPY finish at today in relative volume? About 0.11 over normal, the leader of the bunch, right? Everybody else below, below, and below here, but EQNR had the volume behind it, finished the day at 1.52, set up this little range right here, came back up and cracked it right here, and then just pretty much never looked back. Boom, boom, boom. Consolidates for a while up here, and then has, a push higher for the highest point of the day. Using, if this is our entry signal right here, this 1 5-minute candle kind of tells the story. 5, 10, 15, stop loss down here, risk down here, and max reward up here, which is what we like to see. Multiples, or multiples bigger than the risk on the reward area, which EQNR set up nicely and performed today. Pretty clean break there. Nice clean chart. We did have one in EXPE as well. Right here, I don't know where my arrow went. Hold on, I got on the wrong tick there. There we go. Okay, so EXPE, little wide range bar to start the party. Come in here and set up our high. Then we go chopping around this little range right here, and as soon as we break it, off to the races. Another consolidation area here before getting on to the rest of the party up here. So once again, small risk area. It's going to go ahead and push this up to here, and we can see a little over, we could probably fit that in there about 3 times, I would think. So nice risk to reward ratio on EXPE as well. And LOGI, a little bit thinner of a stock, but finished today not quite 400,000 shares. So, as long as you're not trying to do too much size, 2, 3, 4, even 500 shares was probably easily doable in this. How many shares do we have traded in this 5-minute candle right here? About 6,000, almost 7,000 shares. But once again, vacillating in this little area right here, pops it right here, and then off to the races. Once again, we just take this line and push it up here to illustrate risk versus reward. We had our risk, let's see, right here. Risk was down here. Let me pop another line up there. Nice tight risk area, nice juicy reward area as well. EQNR, LOGI, EXPE, PNR. Okay, here's a good example of one that was doing what a lot of these were doing today. Hey, we're in the money. Don't take it. We're right back down here to flat, sitting through a little pain before we head back up. Just barely getting past those previous highs there, but a decent entry nonetheless. At least it gave us a little time to take some money. If we're sticking to our hard stops, we stayed in it. Sipped a little bit of pain there, right around the break-even area. Just reminds me of a risk-on, risk-off trade from Holly. If we accepted a little bit more risk today, which wasn't real easy to convince ourselves to do, we would have gotten a little bit more out of this one towards the close. But I think that's about all I got today here. EXPE, PNR, and MTN. Have we talked about this one already? Okay, so notice this short-term resistance here. that the system automatically draws on the system for us. All right, so we got this little area right here, breaking through, hits that short-term area of resistance. Now, our risk is here, right? Entry's here. We get in the money, buffs up against that short-term resistance, pulls back down, makes another run at it. More and more I'm seeing these days where they'll hit that little resistance area, take a little breather and pop back up. This is a classic example. If we're in it here and we sit this wiggle, sticking to our hard stop, gather some steam, comes back up here. That's a nice little flattened out area, another little range break. Perfect time to bolster the position. And after this level was hit, short-term resistance was pounded through. That's where we got the majority of the move in MTN today, Vail Resorts. I was looking at the earnings date here on Mountain, getting a blank here, but I would think all the ski areas did pretty good with all the mountains and mountains of snow that everybody got through this last ski season. So all in all, some pretty high quality opening range breaks coming through, but we had to go to the range bound turbo breaks to find those today. So just keep in mind, as a rule of thumb, if you're watching the compare count windows, which by the way, this one for the big caps is available in channel 4 right down here. If you want to start watching this thing, start noticing what these readings are telling you 15 minutes into the open. All you have to do is click on over here to channel 4. Once you do that, you'll see all of mine, Steve, Andy's, and Sean's favorite windows here. You'll see the compare counts down here. The bigger cap ones are down here, 4 billion and higher, 5.4 billion and higher. The turbo brakes range bound, the turbo brakes no resistance, as well as all of Steve and Andy's favorite windows as well. So that's pretty much it for today, ladies and gentlemen. We're almost at the top of the hour. I saw some questions popping in here. Dean has left, so I hope he was aware of the fact that that was Interactive Brokers.
Yeah, I double answered him.
Okay, perfect. So looks like we're all caught up on questions, unless I need to backtrack and answer somebody's question, Steve. I guess it's time to bring Scott in.
Do not believe that's the case. We're caught up.
Let him tell everybody how they can either save some money on an upgrade or save some money on an initial subscription.
There is a question there before Scott comes in, if you want.
Okay. All right. You're talking about Lee's?
Mm-hmm.
Okay, Lee's asking, I don't get when Holly's list profit save for exit reason when the entry price and exit price is the same. Okay, I think I know what you're referring to there, Lee. Let's see if we can find an example here real quick here before we
probably has to do with slippage by the time the algorithm kicks in.
Yeah, I know exactly what you're talking about here. So let's just sort by, okay, reduce risk. That was, oh, you know what? I threw my, let me just get back in here and set this back to 1 share so I can see the actual values.
All Sam is a good chart he's putting up there.
Which one?
PS.
All right, which module was that from? There we go. Okay, so here we see Holly with a profit save, but it's showing a 0. All right, so Holly made the entry here. Here's the entry line. Notice right here, and I'll just expand this candle out here. This is where Holly flatted it, right here. Now, when the signal, you know, when she made the decision, she might have been up a penny or two, but by the time the actual trade closed out, it was back to flat. And that is, as Steve said, kind of what we would chalk up to slippage, right? She was up a couple of pennies, but before all the signals went through, the thing moved down another couple of pennies, and that's why she's seeing reduce, or let's see, did I just lose that again? Okay, right here. So that's why there was probably a couple of pennies of profit, but by the time the trade closed and the system updated, it was showing a 0 value. So I hope that makes sense, Lee. And sometimes we'll even see a profit save slightly negative, and then on the other hand, we'll see reduced risk sometimes come in slightly positive. So it's typically just within a few pennies when things are hovering right around flat or plus or minus 2 cents. Would you agree with that, Steve?
Yeah, and there is a small calculation in there. It has to do with a percentage of the smart stop. If it gains that amount, then the trailing stop or the profit save algorithm does kick in. So it won't go up 5 or 6 cents and then reverse and call it that. It has to go up a certain amount before that algorithm is triggered for that risk management.
Right. We are working in behind the scenes to try to smooth that out a little bit because it's not a huge deal. It's just a little kind of annoying from time to time. That's my take on it. One other thing I'd like to point out here is these some of these risk on percentage values today. We're seeing a lot of well, some of these are duplicated, but it's not very often we have an 8%er, a 6%er, and a 5%er on there today. So, as we trudge along in this area right here, the more we trudge, the more the system can make sense out of it from a statistical viewpoint. So hopefully we're going to see Holly start performing strongly moving forward. Are no guarantees. We'll see what happens. Let's see. Let's take one more temperature from Google today with the, let's just see real quick here. Not a whole lot of reprieve here. So it's going to be an interesting day tomorrow. All right, Scott, if you're ready, we're ready for you.
All right, sounds good. Yeah, a couple things on the way out. There is an ebook. Both Jamie and Steve contributed chapters to it, so go to trade-ideas.com/ebook to make sure that you get that download. And then there is also a podcast we usually release weekly. Search for Trade Ideas Podcast wherever you listen to podcasts to make sure you have that added as a subscription so you can get the new episodes. Check out the old ones. There's some good guest episodes in there too. To save this month, use Auto Holly, all caps, and that'll save you 15% off your first month or year of Trade Ideas. That code will be good until this time next week, so don't miss out. Those of you that are on standard and want to upgrade to premium can also do Auto Holly as well to do an upgrade and save some money doing that. Get access to the AIs and all the good stuff. Any questions, email info@trade-ideas.com. Follow us on Twitter. Steve is at QuantBot. We also have at Today Trade. Jamie's at QuantBot. Steve Gomez is at Today Trader. We also have at Trade Ideas. Facebook.com/Trade Ideas Pro is where to go to like us on Facebook and share stuff with your friends. We'll have a recording up later on tonight or tomorrow and send you an email tomorrow with a reminder about how to find it. Thanks, Jamie. Thank you, Steve. Thanks, everyone. Have a good one.
See you tomorrow.
Thanks, everybody. We will see you tomorrow. Bye-bye.